get talking a little more about it. We have Gautam Shah, who's the founder and chief strategist at Goldilocks Premium Research, joining in. Gautam, hi, welcome to the show. We've started 2024 on a bang in terms of the gains that we've seen for the broader markets, the follow-on buying that we've seen in the Nifty. Is there some caution seeping in for you now? Are you a little more wary of market returns now on?
Good afternoon. Yes, I think we have been cautious, but I think in this day and age, caution is a very misinterpreted word, because I think this market is seeing rotational strength and rotational correction. So I think if you are in the right pockets, you are in the right themes, there is still a lot of money to be made. As we got into the new year, the markets were very overbought on all traditional and breadth parameters. Then for about 10 days, we just spent in a range. 21,500, 21,800 on the Nifty. And today we are attempting a breakout on the upside. But, given the fact that banks, IT and Reliance, the three big heavyweights in the market, all doing well at the same time, you can't have the Nifty falling. You can't have the market falling. So that gave me the confidence maybe a couple of days back when we released the report. We said that, this market maybe has one more leg on the upside towards 22,200, 300 before any serious correction. Yes, mid-caps, small caps will see rotational corrections. There are pockets which are weak. But I think if you are in the right stocks and themes, as I just said, I think the markets are still rewarding.
Hi, Gautam. I just want to ask one question. From a risk-reward perspective, would you recommend clients to go long, or would you recommend clients to book profits where they can, purely from a technical perspective?
So I think risk-reward has to be looked at in terms of sectors. I mean, this is not a market where you can do aggressive Nifty and Bank Nifty trading, because I think it's a lot more dynamic, and maybe the risk-reward is not the best, after the parabolic run we've seen in the last 2 months. But then if you're looking at stocks in sectors like IT, pharma, metals and chemicals, I still feel that there is a lot of money to be made. SBI for one is our favorite in the banking space. I think that should do exceedingly well. Divi's Lab, Dr. Reddy's, Cipla in the pharma should do well. And IT, I think I did an interview with you last week where I spoke about 39,000 on the IT index. So that should also come by. So honestly, ignore the Nifty, ignore the noise, and focus on the right stocks with good fundamentals.
So, your thoughts on, you said the IT index can go all the way up to 39,000. Would you play it via Infosys or TCS, or a combination of both? If you had to bet on an IT stock outperforming even the index, which is likely to do well?
Well, honestly, we've been looking at mid-cap IT very closely for I think, a couple of quarters now. And there have been fabulous returns there. Moves are parabolic. The fundamentals are great. The valuations are not out of whack. If you look at a Mastech, look at a Persistent, eClerx, Emphasis, which we've actually covered today for our clients. I think that's probably the best basket to trade, because I think there is a lot more upside and much greater upside than the large cap IT. But if you want your portfolio to be stable and mirroring Nifty returns or slightly better than Nifty returns, I would go with TCS. I think TCS, Wipro, HCLTech are our favorites. I know Infosys has done very well today, but if I have to take a view for the next 6 to 12 months, I would still go with the other three.
Okay. Gautam, just narrowing down on banks, one particular one that I wanted to discuss with you is State Bank of India. It's not moved as much as, say, the smaller PSU banking peers. If you look at it, a year ago, it was 600 odd rupees. It's 627 as we speak. Do you think that would be a good bet to take on, or, take some positions in an SBI which could likely outperform simply because of its underperformance last year?
Ekta, I think I got a similar question on ITC a couple of years back, when it used to languish at 200 and nobody looked at it, and we all knew that the valuations were great, but it never moved. And then it became a doubler in a year. Something similar happened with Coal India. Extremely cheap, PSU, nobody looked at it, under-owned, and then it became a doubler. I think SBI could do something similar. We remain very bullish. It's a stock which is at a 7-8 PE. The banking index, seems to have broken out. Technicals are great. And I do know that smart money is very active. So for me, at a 21,700 index, risk reward is extremely important. I don't see more than 5 to 7% downside for SBI. And I do see 30 to 50% upside at least. So keeping that in mind, it might take its time, but upside is large.
Would you say the same of names like Kotak and HDFC Bank as well? Both of them have been big underperformers. Despite the recent spurts that we saw in HDFC Bank's prices, they've virtually done nothing.
Well, in that sense, I think SBI is under-owned and HDFC Bank and Kotak Bank are over-owned. So I think, and valuation, there is no comparison, with where these two private banks stand against SBI. So while HDFC Bank can also do well, and I think will gradually move towards 2000, but in percentage returns, I'm still looking at SBI over any of the private banks.
Gautam, within the from the rate sensitive perspective, what would you bet on, the NBFCs or the real estate names? I know you're a bit bullish on the real estate stocks and they've done well as well. But within real estate, what did you bet on? And within NBFCs, anything which strikes you from a technical perspective?
Well, we are taking profits in real estate. I think it's seen a fabulous run over the last couple of years, and I know it's all getting extrapolated for the next 6 to 12 months. But DLF at 800 and many of these top stocks after this kind of run up, we are recommending taking aggressive profits. It's okay if it moves up further, but at some point of time, you have to take that call. So I think real estate is clearly a level where you should take profits. NBFCs have started to look interesting. I think there are many stocks which are developing very well. And when banks do well, generally we have seen NBFCs are high beta, so they do much better. So I would be watching Bajaj Finance and Bajaj Finserv closely. I think there is a possible trading opportunity there.
Okay, just quickly, Gautam, we've spoken about HNI money, we've spoken about smart money, but going into 2024, that's, the mid caps and the small caps are still at record highs. What would you recommend to, say, a retail investor, when it comes to allocation of their money to mid caps and small caps? Maybe be a little more cautious this year, maybe tread with a little bit of caution as compared to what we saw last year, simply because of the kind of run up that we saw and which is continuing. Is there some amount of froth now being created?
I think, I know we all talk about smart money, but I think for the first time in about 20 decades, retail money might just be smart money, because they are probably the crowd or the set of people who have actually, held this market beautifully against all the headwinds that we noticed in the last 6 to 8 months, including the geopolitical risk. So I think that's completely a game changer. But I think last year was about mid caps and small caps. Prior to that was about the large caps. I think 2024, one has to be a little more tactical. It might be about multi-cap. So you need to have a good allocation between the two. I would say 60% mid caps, 40% large caps.
Perfect. Thank you so much, Gautam, for joining in. And we take your point. The retail investor must be the smart money, because that's what volumes suggest as well now as we speak, and our relative immunity to the FII sell-offs as well. Wish you a good Friday, good weekend, and a happy record high on the markets itself. Take a short break, come back. On the other side, we'll talk about a whole host of stocks which, where the lock-in period post-IPO ends, nearly 550 crore worth paper coming into the markets in the next 3 months.